Hello everyone, Tom for Market Zone here. Thank you very much for coming back. Thank you very much for watching this video. This is another weekly market analysis update video. Hey guys, thank you for coming back. Tom from Market Zone here with another weekly market analysis update video in which I'm going to recap and summarize what has changed in the financial markets since I sent the weekly market analysis newsletter on Sunday. As you can see, it's been a very exciting day in the financial markets. The S&P is down 1% following another spike yesterday, another spike to the 2400 level. The S&P is down, the DAX is down, gold is up, the dollar index is down. Everything pretty much working according to the trading plans and trading scenarios that I wrote in the weekly market analysis newsletter. But even if you haven't read the weekly market analysis this week, you shouldn't be surprised by the fact that the S&P is down today. Why? Because last week I mentioned that the VIX was near 2007 lows. When the VIX is at such lows, historic lows, not just regular lows, you need to expect that something might happen. You can't ignore the risk. I assumed it will be North Korea that would spike the VIX, but instead we got another Trump scandal, like many others, but this time the VIX spiked from it because of where it was. Now the S&P is testing the 50 days MA line as support. That's where the decline stopped today. As you can see, we can see a pullback from here. If this line will hold as support, we can see a pullback towards 2400 again to retest this structure zone as resistance with the fast MA line that will add more sellers pressure if and when the S&P will reach here. And of course, if the S&P will continue lower, break the 50 days MA line, break the support line, it will probably continue lower towards 2300. That was the final target zone of the bearish setup that I mentioned in the newsletter. But also pay attention to the structure zone that we have that should be set as target zone if you intend to trade the downside. So this is about the S&P and the VIX. Now let's look at the dollar index. The surprising rally that the dollar index had following the French election last week only created a shorting opportunity when it touched the structure zone near 100. We in the elite zone took advantage of this shorting opportunity and shorted USD CAD, USD Yen, and USD Swiss. As you can see, the dollar index touched this resistance and crashed all the way to the harmonic support zone that I mentioned last week and also this week. Now the big question about this harmonic support zone that includes the completion zone of two harmonic patterns, AB equals theta pattern in blue and the AB equals theta pattern in pink, is whether or not it will stop the dollar's decline and send it on a pullback towards the 200 days MA line to test it as resistance. Right now, about 2 hours before the close, we see that the dollar index continue lower, it testing the lower limit of the harmonic support zone. If you are an aggressive trader, that's exactly where you want to look for hourly reversal patterns or intraday reversal patterns that will allow you to time your long entry, long USD entry, or short some of the majors like Euro USD, Pound USD. And if you are more of a conservative trader, you want to see the price pushing higher towards the close, towards the US session close, and maybe tomorrow you will get an opportunity to go long USD once you realize that there are buyers inside this harmonic support zone. Right now, all we are seeing are sellers. Another interesting trading scenario that I mentioned in the weekly newsletter this week was a bearish scenario on oil. I marked the $49.50 as potential resistance zone and as a potential sell zone. As you can see, for the last 3 days, despite 3 attempts, the resistance zone held the price below it, and that means that the bearish scenario remains valid. So if you are bearish or you want to try to trade this bearish scenario, this is your entry zone. You need to maybe look for intraday reversal pattern that will allow you to time your entry. Then place your stop loss above 51 and set your target zone near 48. That's a fast MA line, that's a support line. That provides you a 1 to 2 risk reward, meaning you risk $1 to make $2 on oil, and that's a very nice trade. If you are bullish and you think that oil is heading higher, meaning it's going back into the trend, this is the broken trend line. if oil will climb above the trend line, it will return to the uptrend. So if you think that oil is heading that way, you need to wait for a close above the 50 days MA line and play the breakout scenario that will lead oil towards 51 and maybe 52 to retest this weekly structure zone as resistance. These are the target zone for the bullish breakout play. That's it for this week's weekly market analysis video update. I know that usually it comes on Monday. It's summarized the first trading day of the new trading week, but this week I didn't have anything to report on Monday. Nothing has changed, and I waited till Wednesday, and now I can share with you some interesting updates. So thank you again for watching. Don't forget to subscribe to my channel. Don't miss the next video that I'm posting, and also don't forget to share to show that you care. Thank you very much. See you in the next video.